could you explain to your everyday viewer what is a stablecoin?
Well, there's a couple of types of stable coins, but to bring it down to the simplest level, it is on-chain money, right? It is your dollars, it's your yen, it's your euros, it's your Great British pound sterling. That it used to be cash. We still have cash. Cash is the physical, the notes and the coins. And we've been on a journey over the last 15 years to digitize that cash. Of course, there's been some speed bumps and some inflation, etc. But we're still heading down that road. We're still eventually going to not outlaw cash, but it's going to be outmoded at some point. Now, this is really just the next stage. The internet has changed. We're moving towards a Web 2.5 sort of landscape. And as we believe at Quantum, everything is going on chain, and I mean everything. Your cash, your investments, your mortgages, everything is going on chain. So money is the starting point, really. I think people have been experimenting with RWAs and NFTs, and that's a nice petri dish, it's a nice sort of POC for what blockchains can do. But now it's getting serious, it's getting regulated, and moving money on chain now is the next logical step. So that's what it is. And just to sort of round that off, there are a couple of different types of stablecoin that we've seen. So the one that we all know, the one that we all love, the one that we all are going to use in the future is the fiat-backed stablecoin. Now that literally means that $1 is one digital dollar. Of course, there's a process around that, but that's essentially what it means. So to quote something that you probably know of already, Tether, which is effectively an on Ethereum chain digital dollar, same as like Circle, for example. Each one is supposed to be worth $1. There's discrepancy on that, but let's not go into that right now. Then there's the collateralized stablecoin, which basically means that the coin's value is backed by something else, which could be a commodity or anything else really. And then the last one, something we don't really like anymore and has been deregulated pretty quickly because of its risk, is algorithmic stablecoins. Now, I think a lot of people were around when Luna crashed, and there's been a couple of other examples of algorithmic stablecoins that have not gone particularly well, but they still do exist. Maybe they'll reemerge one day. We'll see.
How is a stablecoin actually stable?
Let's stick to the fiat backed because that's the one we know. So we're going to stick to Tether and USDC. Again, these are both on the Ethereum blockchain, and we don't agree that that's going to be the future necessarily. But let's just stick with that as it is right now because that's where the liquidity is right now. So stable's the word. If these things are backed one to one, dollars to dollars, wherever they're held, and that price stays as it's supposed to be. The idea is with monetary policy, that value is not supposed to change unless there's inflation, deflation, cataclysmic events, or interest rate changes, let's be honest. So the idea is while you're invested in or holding assets that are a little bit more volatile, a little bit more dependent on market moves, your Bitcoin, your Ethereum, XRP, anything, you want to be jumping in and out of that, buying and selling effectively that asset. And the way to do that, like quickly and efficiently, is by making sure the assets you're trading on and off of are on chain. And so stable coins being on chain and the asset being on chain, it's a very quick swap, a quick transition, a quick sell and buy. Whereas if you were trying to use fiat to buy Bitcoin and sell Bitcoin constantly, you'd be stuck with charges, inefficiencies, bridges, intermediaries that are not too dissimilar from the financial system we have now. And that's obviously something we're trying to get away from.
Yeah, and exactly just tying in what you were saying earlier, this sounds like the convergence, right? Of bringing back into what is your traditional finance into the future of finance.
Yeah, I mean, again, we believe, and we've seen now that everything is going on chain. So eventually, and you won't even see the change. You'll go to your Starbucks or your Costa or whatever coffee shop you go to, whatever grocery store you go to, and when you pay for your goods, it will be done on chain. Your cash will be on chain. The message will be on chain. The point of sale system will connect on chain. And even the ledger that's keeping those groceries, inventorized is going to be on chain. That it's
Yep.
everything's
I
going
think,
there.
Max, we could add in that even Swift has moved towards the new ISO. So everything
Correct.
is on
Well,
chain.
two amazing things have come out of this, the Swift side. One is that they've at Cybos in Frankfurt have come out with the creation of an interbank ledger based on Ethereum. Which there's two sides of that coin. There's a lot of people who think that's a step in the right direction, a lot of people who don't. And then the other news, like you say, is the move to ISO 2022 this week, which for us is great because what it effectively does is it changes messaging, which is the underlying system backing, well, making all of finance work. Because let's be honest, we've said this a few times, value doesn't move, money doesn't move, it hasn't done in a long time. We're moving towards a monetary system where the value is going to move again because it'll be done on chain. So there's just been messaging. And so now what's happened is the messaging system has become centralized and more widely adopted. And it's not just Swift dependent anymore. And that puts all traditional finance companies, businesses, and even Web3 businesses on an even keel now. And what's going to happen, I think, the next evolutionary step is mainstream banks are going to lose wallet share to this.
100% agree.
So if you were a mainstream bank, how would you prepare before you're written off of the charts?
We talk to them a lot. We see them a lot. Okay. I don't think they quite understand the negatives that are coming with this, the shifts, in the shift in tide. They think this was a great thing. They think that the narrative has come from the top. The messaging system is going to keep Swift in play, and it's going to mean more money towards the banks, more control to the banks. It's not. It's not, because what's happening is over the last 2 years, in the delay of getting ISO out there, uh, many other companies like us, even like us being natively ISO, have been preparing for this moment. And with this move to blockchain and the banks struggling to even find out what it is, let alone keep up and provide new services, um, they're going to lose wallet share to this. And what's going to happen, what I think might happen in the next 2-3 years, and let's be honest, with the liquidity and capital that's with these large institutions, there's going to be mass acquisitions and mass
Well,
mergers that are going to be coming because these guys are going to need solutions that they don't have, that they've tried and failed with, adopting, let's be honest, the easy wins out there, like trying to use Ethereum, and then that's going to get undone very, very quickly. So it's an inevitable step for me.